Board. So good afternoon, everyone, to the Zoom meeting. We have a wonderful, wonderful guest. His name is Mike from Louisiana. He's an LSU. I just found out that he's an LSU fan. So there's one area that, one thing that I found that I could actually hate about him. But I already love him already, so I don't know. But in any case, I wanted to kind of intro him by being able to say this. Imagine in this economy where we have high inflation and the value of the dollar keeps on going down. Imagine if you were able to have access to a money printing machine. There's a show like that called Good Girls. It stars one of my favorite actresses who was in the TV show Suits. And because of her, I started watching it. And the whole premise is they go into a money printing business, counterfeit bills, and they do it so well that even machines can't tell the difference. And the whole premise of the seasons that I've watched thus far is that, yeah, money is free, but you're not free from all the difficulties that come along with it. And at the end, long story short, they find themselves paying a higher price for having free money than it is worth. Okay, so obviously some people are willing to pay such a high price. But imagine if you could get into a machine that prints money like that, and you can basically create money each and every single morning and be able to supplement your income, supplement your retirement, the Christmas gifts and whatnot. Would you get it? Well, what is the cost? Because nothing is free. Well, what if it costs you $1 a day? Would it be worth it? And I believe that majority of people will say, yeah, why not? And this is what Mike is in a nutshell. He is a money printing machine. And I have been watching him on live trading, and this man is a beast. He is the GOAT. And I'm so excited to have him come join us and share what he's doing. So without further ado, Mr. Mike Walker, would you kind of jump in with your teaching, with your presentation, and walk us through what you do and what your results have been thus far?
Wow. Well, thank you, CJ. And it's going to be kind of hard to live up to that presentation speech there. Anyway, for some of you guys who are on here who have traded with me already on the live chat, this is going to be a little redundant and everything, but for everybody that's new here, hopefully I can impart some of my trials and tribulations and errors and stumbles and everything like that I've gained in trading the SPX. I've been trading for a number of years, but this is the first type of strategy I've followed where I've been consistently profitable, and it's so scalable, as you guys all know in trading. It's just as easy to sell one as it is to sell 10, just depending on your account size and your buying power availability. So, oops. So let me. I'm sorry. I've got to start sharing my screen here, man. Hang on here. Give me 2 seconds here. There we are. Okay, somebody tell me some feedback. Do you just see the slide itself now? Hello?
I don't see it.
Don't see anything yet? Okay.
Anybody else see it?
Nothing visible. I see your name, Mike. That's it, because you're
Oh,
talking.
okay. Well, let's see here. I thought we had all this worked out before. Okay. Primary monitor. Okay, can you guys see anything right now?
No. So you move your cursor around, you see the share screen icon, you press on it, you can choose which thing you want to share, whether it's the whole desktop or a specific application.
Yeah, let's see. This is PowerPoint, slide share, current slide, start slideshow.
Inside of Zoom,
Inside of Zoom, yeah.
and you've got to the share screen part,
Yeah, I got that.
and then it should pop up a list of your applications or icons of the different screens.
Let me try
And you
that.
choose which one you want to share.
Okay.
Choose the screen. It's easier that way.
Here, how's that? Is that popping up?
Nothing new.
We got it working before.
Yeah. We had it. It was great before. Trust me, we guys, we really did try to get this all squared away beforehand.
There you go.
There you go.
Okay. All right. Can we see the slide now?
Yes,
Yeah,
we
now you
can.
got it.
Okay. And there's you don't have any notes or anything like that. You just see the slide itself, right?
Yep.
Okay. Fantastic. Whew. All right. Technology. Gotta love it. All right. So guys, this is going to be, as CJ has said, this is trading strictly the SPX options that expire that day. And this is a fairly new thing that started up this year. They had the 3-day-a-week SPX trades earlier this year, and I never got into it because I was always afraid of that. SPX is such a large instrument. I was going to lose my tail and everything else, and so I just kind of avoided it. But there's a Facebook group called Tasty Trade Options. And I think some of you guys are members in there too. There are a bunch of guys in there that were trading these things, and they were having really good success and high probabilities of success. And that's when I said, okay, I've got to learn this thing. So I started trading these things for paper trading for about 3 to 4 weeks just to get a flavor on how these things move, the volatility, how they relate it to the overall market, et cetera, before I ever put a dime in it. And when I did, I started off very slowly. I traded one contract for several days, and then I up to the 2 contracts. And over a period of the last 4 months, I've slowly built myself up and my confidence level, and feeling that, okay, I've had some success with this. I can increase my size here, and I'm up to about 18 to 20 contracts now with it. So the law of large numbers says that 5% on 20 contracts is in reality a pretty good chunk of change versus 5% on, say, 2 contracts. But you have to start somewhere, and you got to start where you're comfortable at, where your risk level is, and everything too. So without further ado, let me jump into this thing and get this thing going here. The normal disclaimer: hey, I'm not a licensed financial advisor, and everything today is for educational and entertainment purposes. And you got to trade your own risk. This is all risk capital, past performance, yada yada. Okay, so nobody sues me. So what do? I sell premium, like that. I suck at when it comes to directional trades in terms of Facebook or Tesla's going to go up 20 points for the next week, and I'll put that option in there, and I'll sometimes I win, sometimes I don't. And you guys tell me if anything messes up my screen here, so I keep things going here. But I focus on 3 different strategies. I sell iron condors. That's my main focus right there. Or I'll sell the call credit spreads, or I'll sell the put credit spreads. And based on the people I saw in here, you guys are all experienced traders, so I don't think I need to go in here and tell you how to put a put spread or a condor on. If you do need some help with that, there's tons of videos on YouTube, and they can explain it a whole lot better than I can. So what I'm going to do with you guys is I'm gonna walk you through my process during the day when I walk into my office in the morning, and my office is here in the house, and how I started and what I do pre-market, because your pre-market workup is super important to what we're doing here, because you're trading the SPX, which represents 500 stocks and it's tied in with the futures and everything. So you got to have a good handle on a macroeconomic point of view, what's going to go on that day with that. I mean, are there potential landmines? So the first things I start in the morning is I start looking at my calendars that have all the economic reports that are coming out that day. This is yesterday's. I used econday.com, and at 8:30 yesterday morning, the employment report came out. Well, fortunately, it came out before the market opened, so the market had some time to digest it, and it was okay. And I still didn't trade yesterday because the market fell, and I tried to get some trades in, couldn't get them trade, and I set out for the rest of the day. But I use this one right here, and then I also use another one called Forex Factory, and they will all show you as to how important, how volatile that particular report will be. But, the GDP reports can be a whole lot more market moving than what, say, some Canadian economic report. So after I get a feel for what's coming today or what may be coming over the next couple of days, then I proceed to the next set of stuff I do. I jump into my platform, and I use Thinkorswim, and I'm not advocating any particular platform, but this is what I've used for the last 6 years. I'm comfortable in it, and it's my playground. I start off with the E-mini, and if you're familiar with the E-mini, basically it's the future version of the SPX right there. And the E-mini it's the mother of all instruments as far as I'm concerned in the market. And it's going to give you the best indication as to what the overall gut feel for the market should be for that day. So I'll pull up what's expiring, and this is the E-mini. This expires Monday, since yesterday is already closed and gone. So the numbers that you see they're not going to be correct or everything, because the futures have stopped trading. But in the morning, about 9 a.m., I'll start looking at this, and I'll start honing down what I'm going to be doing. So I will, and can you guys see my pointer okay? Is that a yes? I'm just assuming that you can.
Yes.
Yeah.
Okay, good, thanks. Okay. All right, so this is the E-mini, like that, and the E-mini closed at 40.66 Friday evening here. And so it's at the money right now. So what I'll do is I'll look at where is my 5 delta, my 4 delta strikes at. And right now for the E-mini, it's at 4,039.95. Okay. I said this is 30 minutes before the market opens up, like that. So I'm kind of honing in on things. And then I'll look to see, and I'll look down here to see where is on my call side where the 5 and the 4 delta are at too. Okay. So now I got those pinpointed and everything. Then I'm going to look, see how far are these strikes away from my at the money. And then also, how much is my ask price? Now you can use ask, you can use bid, it doesn't matter. Okay. I just focus on the ask, try to keep it continuous here, some continuity. Right now, the ask on this put side is 80 cents. And the ask side on this 5 delta call is 80 cents too. And like I said, these numbers are probably not correct because it's Monday and the futures are closed right now. But if my strikes for my puts are further away from my at the money than what the call side is, and my premium that I'm collecting for selling that put or buying that put is higher than what it is on the 5 delta for the call side, then that's going to tell you that the market is skewed to the put side. And as we all know, puts are typically more premium rich than what the call side is, because stocks take the elevator down and the stairs up. So I start off with this just to get a feel for what this is right here. And then I will move on to the SPX. I also, I'll show you another one here too here.
Hey, Mike.
Yes, sir.
So I don't hate to butt in. So you were, seems like you were going somewhere and then you stopped. So the fact that it's skewed more to the put side, does that mean you thinking the market is going down to the put side, or since it's skewed and the put side is richer in premium, that's going to be your first entry?
It's I'll tie that premium with how far is that put strike from the at the money versus the call strike, because there were a couple of days this last week where the call strike was only maybe 3/4 or almost half the distance to at the money as the put side was. And that's all going to be reflected in the premium and your delta too. So when they're equal distance from the at the money and the ask premium is pretty much the same, without looking at anything else, that's telling me that, okay, the market is pretty much even as to whether or not we go up or down. They're not skewing it too much there. But I use this information in combination with other information I'm going to go into to get an overall, and I hate to say gut feel, because gut feel, I could just flip a coin for that. But I use all that collectively to say, okay, based on everything I've seen so far this morning, the market is leaning towards this particular direction, whether that be the call side or the put side. Does that answer your question?
Go Tigers.
Okay, go Tigers. So I keep a notepad by my desk, my keyboard right here, and I record the stuff every morning. I'm looking at both the SPX and the E-mini. I'm looking at the 5 deltas. I'm looking at how far they are from each other. I'm recording as to what that spread is, and I'm looking at how many points it is, etc. Just everything. And I know I can look at this on the screen and everything, but by me writing this thing down and looking at it historically, okay, what was it yesterday or the day before? And how big was my spread then? And how much was my premium I was collecting on those days right there? And that kind of gives me a really good feel. Now, about a month ago, these premiums were really rich, and my strikes were anywhere between. Now this is this is like 4 or 5 about a week or so ago, because I wanted to find a really good clean page I could show on my notes right here. These strikes are running 87 to 90 strikes away from at the money. Market was really up that time. The E-mini was running at 36% implied volatility, 42% implied volatility. That's a volatile day. So volatile days, your 5 delta strike is going to be further away, and your premiums are going to be higher. This last week, the premiums were low. The volatility was low on Monday and Tuesday because everybody was waiting for JP to speak on Wednesday. My strikes were about 50 away from at the money, and my premiums for those 5 delta strikes were running around 50 cents. It was ridiculous like that. So you really have to, you can appreciate low volatility in terms of, okay, I'm not going to be tested on my shorts right there, but at the same time, I'm not going to be rewarded for taking a position and everything. So moving on to this, like I said, I do the same thing with the SPX like that too. That's what I do for the E-mini, because they share 99% of the same DNA. All right. Now, you guys are pretty experienced, so but I'm just gonna put this out there. SPX does trade options almost 24 hours a day. They traded on the Globex right there, and I'm going to caution you not to trade those right there, because the spreads between the bid and the ask are extremely wide. The volume is low, and getting in and out of those trades is going to be difficult. And as soon as the market opens, those premiums are going to change big time. So if you decide to trade overnight or nighttime on the SPX options, go with caution. You've been forewarned, forearmed, and everything. So, but my best suggestion is you wait till normal trading hours, do your pre-market workup, and you've already won half the battle right there. Some of the other things I look for when I'm doing all my pre-market workup is I will look up here for my implied volatility. And I do this usually about 5 minutes before the market opens up, because it is changing and everything. I also look at see what the market makers are saying that the range is going to be that day. Now, this particular day, I just round this up. It's 29.2. I'll round this up, and this is for this coming Monday. I will round that up to 30 right there, and use that as a gauge as to where I set my strikes at. So it could be up 30 or it could be down 30 points. And usually I try to go 2 times this range right here if I can get some decent premium. So one of the other metrics I look at that you guys should be familiar with is the ATR, the average true range. So on ES, on the E-mini, you can't really look at that for that particular day, because the E-mini's already been trading since 6 p.m. night before Eastern time there. So I will look at the average true range of the SPX the day before. And barring any unforeseen, any known big economic reports coming out or whatever, that average true range should be pretty close to what it was yesterday, given, maybe a plus or minus one standard deviation. So I'm continuously writing all this stuff down on my yellow pad and I'm reviewing it and I'm looking back at it to just get a good gauge as to when I set those short positions. Once I set those positions, uh, I don't jockey around with them like that, and I've collected, and I'm in the game at that point. So it's too late to go back and say, well, maybe the true range today is 50 as opposed to 40, and I set my strikes too short like that. So moving on, then the next thing I do is I pull up my chart for the E-mini, and I look at support and resistance. And I look at it on a daily basis for at least a year's times, or maybe sometimes 2 years' time, given how much volatility we've had over the last year and a half here, 2 years here. And I'm continuously drawing support and resistance lines. So I'll look at it on a daily basis first. And I've already got a good idea in my head based on the 5 deltas I've seen on the SPX and the E-mini, where my range might be that day. So if I'm looking up here, I'm thinking to myself, okay, my 5 delta range is going to be outside of any major support or resistance area right here. So whatever, going with those strikes right there should be a fairly safe trade today. So I'll look at that. I start off in the day and then I drill down to an hourly, and I'll look at about a week's worth of hourly movements in the E-mini. I don't use the SPY and I don't use the SPX because the SPX doesn't trade after hours, and the SPY, you can use the SPY, but I like the E-mini. It's just my flavor. You can use the SPY because the SPY and the E-mini are pretty close to each other. They're kissing cousins, but it's just what I do with that. So the next, we're still doing a pre-market workup. I I use Thinkorswim, and Thinkorswim has an agreement with a company called Bookmap. If you're not familiar with Bookmap, they have a subscription service, and it's not cheap, but the bells and whistles that you get with their subscription versus what you get with Thinkorswim is pretty significant. But Thinkorswim does offer a free E-mini, Apple, and Microsoft Bookmap availability, or you pay $40 a month and you can look at any stock or any future. And I have a subscription, so because I like to trade Tesla and I trade some other stocks too, and it helps me if I'm like sell covered calls that day on a particular stock. That okay, this is where I need to sell it at. This is where I need to sell it at, or whatever. Okay. If you're not familiar with Bookmap, I'll just give you a really quick thing because I don't want to get lost in the weeds with this right here. Bookmap is a visual representation of a heat map of all the limit orders that are currently on the books of the market makers and the big money and everything else. Now, this is all pre-market right here, and I do a screenshot of this and I post that on CJ's Discord site right there. And I put that in the premium side, and he has a free side too, because I try to give to both sides right there. These orange lines that you're seeing right here, these are orders that are sitting on the book. These are people who are saying that even though E-mini is at 4,099 right now, if it hits 4,100 or 4,115, I have a sell order in that I'm going to sell. So it is pumping liquidity into the market, and these lines right here act as a magnet to the current price. And when I look at this pre-market right here, I'm seeing a lot of people who feel that the market is going to go up, and if it does, they're going to sell at these parts right here, these levels and everything. I don't see a whole lot of liquidity down here. I don't see a whole lot of people saying, hey, if we dip down, I'm ready to buy this thing. So when I look at this right here, pre-market, I'm thinking to myself, okay, I see nothing but people who are willing to sell if we go up higher. They're anticipating the market's going to go up higher. So when I look at this, I'm thinking there's a lot of bullish sentiment in the market at this moment. Now this is about 9:10 a.m. and I'm on Eastern time too. So I am not anticipating any kind of major drop today. Um, and especially if there's like no economic reports coming out that could possibly derail the market or anything. So if not, everything else being equal, if this is what the market looked like prior to opening, my first action on here would not be to sell the call spreads. I would come down here and go ahead and get my put spreads in as quick as I could. In anticipation the market's going to go up, those put spreads will go up in value, and then I'll jump out like that. Or if I want to set up a condor, I'll wait till this thing kind of peaks out, peters out up here at the 4120 level. Then I'll go ahead and sell the call spreads and have the iron condor set up for everything. So there's tons and tons of videos on YouTube about Bookmap. They have their own channel. They have a professional trader that comes in there every day, and it's just a really, really awesome program. So this is my main chart. This is what I look at all day long, and I continuously report that in CJ's premium channel there too on their live chat. Just to show you the power of this particular program, and I'm not shilling for Bookmap or like that, but I love what they're able to show me here. This is at 8:30 in the morning right here. Like that, there was not a whole lot of activity going on prior to this report that was coming out at 8:30, and this could have been a GDP report, a jobs report, or whatever. But if you'll see this darker area right here, this is all the big money pulling their orders out of the market. They took the risk off the table. As soon as that report comes out, the algos kick in and they jump it up and down till they figure out, was this a good report or a bad report or whatever. And then they'll start coming in and they'll start putting their orders in. And apparently this was a good report for the market. Maybe the unemployment went up, and now we are moving up like that because it was indicative that the Fed's going to be nicer to us now. But you can really see what's happening and Bookmap will let you get down to like almost like a 5-second map if you wanted to, but that's too granular for me. And just to show you, hang on just a minute. Sorry, had to get a sip of iced tea here. This is one afternoon. I was watching it, and I'd already finished my trades for the day, and I just love watching the charts and everything. This is about 1 minute before the close of the day, and maybe it had been a really great day, and all this activity right here, this jumped in like a minute before the close, and these are people who say we want the market to go up because we have all these contracts to sell. Right, that maybe they bought down low and they want to sell it out, but we're looking at 500 to 400 contracts for each 50-cent level in the E-mini. And you think to yourself, there's no way that's going to get filled. Within 5 seconds later, the market jumped up and took out every bit of that liquidity in the market. And we're talking about millions and millions of dollars, E-mini contracts that just got sucked up and absorbed by that. So that gives you an idea of how big money can move this market as quick as they want to. And I don't know about y'all's accounts, but my account says that, hey, I'm just riding the coattails. I'm happy to pick up crumbs. So anyway, that's a really quick digesting the Bookmap. You can go on YouTube and there's tons and tons of stuff. And they got a professional trader that trades in Bookmap that streams it every day too. And you can learn a lot there. So opening bell rings, you've already done your pre-market workup. You know exactly where you can set your short strikes at, whether you can do an iron condor, whether you can do a put spread or a call spread, and you exercise that thing and boom, you're in the game now. Now what happens? So I look over here, my analyze tab here real quick. I can see my iron condor. The blue line says at the end of the day, this is where this condor is going to be. This purple line right here says this is where the value of that contract, that trade is at the moment here. And as soon as you set that trade up, something's going to happen. It's either going to go up, it's going to go down, the volatility is going to fall, whatever. You just never know what's going to happen, which way it's going to spin. But there's a good probability if you jump into these type of trades, within the first 15, 20 minutes, you will go positive, you will go negative, right? That is because it's going to be jockeying back and forth right here. And if it dips down too quickly, say something pops out on the news and the market drops, well, you're going to drop down here, and depending on how many contracts you got, you're going to be red big time with that. And then you have to ask yourself, okay, with my risk profile, do I want to get out now? Or do I know the fact that, hey, I've set my break even point way down here, and this is going to give the market room to breathe. It's going to breathe up and down. There have been a couple of days where I got caught and it sailed all the way down here. I was sailing all the way up here, and I was down, I'm ashamed to say, $10,000 to $12,000 on this trade, but I held in, and the market reversed itself at the last minute, and I closed out just right above or right below my break-even points, and I was able to make profits. But that's stupid. Don't do that. With that. So anyway, I said, I'll do the condor, I'll do a put spread, or I'll come here and I'll do the call spreads. Like that. So you're in the game, you've executed. What's going to go on now? What are we doing? We are monitoring. Think of yourself as a surgeon, and you got the patient on the table. You make that initial cut. You just can't go walk out and get a cup of coffee and come on back. You've got to watch that patient. Same thing with this trade right here, because if something happens, it can go ugly really quick. So besides the book map chart that I'm watching, because the book map has given me microsecond plays what's going on in the market in terms of the E-mini and the big money, where they're pushing the market up or down or whatever. But I'm also watching the dollar index, which is the DXY. I'm watching the VIX, UVXY, NASDAQ futures, Dow futures, my advanced decline, my volume speed. I'm also watching the delta of my short positions, because I sold, when I went into these things, I either sold the 5 or the 4 delta. If that delta starts creeping up to like 7 or 8, that means that particular side of the transaction is going red. And it's like, okay, is this a trend, or is this just a little pop? We're just trying to feel the market, what's going on. So I will watch all those things continuously. I use financialjuice.com to keep up a minute by minute what's going on in the news financial wise. They're really good about keeping you up to date. I don't have a subscription to Bloomberg or Benzinga or one of those other big news agencies. So this is free, and it's great. It does everything I need to do. If anybody's familiar with TheoTrade, I was able to grab a couple of charts settings from those guys, and they have a quantitative ticks. This one right here is the entire market, and the purple says things are rising. This is yesterday, okay? So we started off, we dropped down low because the jobs report was ugly, and then we started climbing up and grinding up, and then we got past that, and we just kept on going. So we recovered quite a bit from the day before. Now this chart right here, it breaks it down in the individual market indices: the New York, the NASDAQ, the S&P, and the Russell. And each one of these, this is all ticks. They're not candles, they're ticks. And by looking at this chart right here, I can tell, is the market, the breadth of the market, is it going up? Is it going down? Are we going sideways, etc.? And I say, if you have Thinkorswim, I am happy to share some of these charts here with you guys. If you don't have this, they're great. I love them. I watch them daily, along with some other charts. And what you want to do after you've got your SPX trade on is you just really want to keep a handle on the overall condition, the sentiment of the market. Are we going to grind higher, grind lower? Or are we just going to kind of kick to the right there? So you got your trade on, you've made some money, and then you start asking yourself, when do I start taking the chips off the table? And it's really going to be dependent upon your level of risk, your risk profile, how many contracts did you sell, how wide your wings are. And the wings are, I'm referring to, what your short and what your long position is on that put side or on that call side. It's just going to be something you have to gauge yourself. Myself, I typically trade around 15 to 20 contracts when I put these things on. So, and I usually I started off doing 20 wide wings, and then I went up to 25 wings. Now I'm doing 30 wide wings. So your buying power and your risk goes up with all that too, along with your rewards and everything, as you well know. But typically, when I hit around 50% profit on the overall trade, I will go ahead and take off half of my positions. And then depending on what the market is doing, I will scale out as the market is moving more and more in my favor. Or if the market looks like, hey, this is becoming a really volatile thing. I got some more big economic news coming up this afternoon. Let me just take the money off the table, be happy, stay green, and go play ball or go fishing or something. So you always want to watch things, keep monitoring these things, especially if you are getting close to one of those sides where you're going to be challenged on your puts or your calls or anything, because you never know what's going to happen. I mean, for instance, as CJ alluded earlier, about 3 or 4 weeks ago, those Russian missiles that got shot down over Ukraine fell into Poland, and within like a minute, the market dropped 60 points that day on the E-mini. And I was scrambling. I was looking at Financial Juice. I was looking at Twitter. I was calling everybody to see what had happened. And the Financial Juice finally reported out about the missiles there. And it wasn't until the next day we find out that it wasn't as bad as we thought. The other thing that you can do is that if the market is starting to grind up higher and you got a condor, okay, you don't close the entire condor. Close the short side that's getting pressured right there, and leave the long side of that side on, and leave your other side on too. And hopefully what will happen is that the market will continue going up. Your puts are going to expire worthless, and your long position on your SPX is going to go up in value. So you saved yourself commissions, you saved yourself the cost of having to buy back your puts, and it's like Lagniappe. You're pulling a little bit extra off the table than what you had anticipated with that. So taking profits, you guys have been trading for a while, you know how to manage your risk and everything. So now the big reveal. I've done 102 of these trades over the last 4 months. As I said earlier, I started off small. I tiptoed into this thing just to get a feel and get comfortable with this. So over the last 4 months here, I started, I think it's around August the 8th when I started. And this is after doing paper trades for about a month. I've done 18 call spreads, 18 put spreads. I just happened to even out that day. And I've done 66 condors, and this is how much I have netted out. Now, this is not including commissions, because I don't count commissions, because to me, it's just the cost of doing business. It's like if you got a job that pays 50 grand a year, you're not going to get 50 grand. You get 50 grand minus taxes and the cost of gas to drive to your work and everything else. So nobody says, hey, I make 50 grand a year, but I really only make 35 or whatever after taxes. So, and your commission structure may be different than mine. So this is what I made. This is what my gross net was right there. I've done 18 calls, 66 condors, and 18 put spreads. On average, for my call and my put spreads, I am seeing around 50 to 55 cents. And this is just the average, okay? And this is taking in all the wing widths I do and everything. As I said, I started off with doing just 5 wide, 10 wide, 15, slowly graduating up as to the number of contracts and my wing width too. With that, as far as my win rates and everything like that, I've had 94% win rates on the put side. I've had 89 on the call side. On the condor, I've had 91% success, and that's just pretty much where it fell at. And the overall, I've had 91 profitable trades. Now, a profitable trade to me is anything above zero. There have been some days when I have broken down at zero and I've made only maybe 15, 20 bucks, but that's a particular day where I was really red and maybe I had to fight my way back to at least break even or maybe a few bucks extra. At that point right there, when I see the trade that's broken, it's like, okay, I'm not in this to make money today. Now I'm just in this to save my neck today and try to get out the best I can and live to fight for tomorrow. So not every trade that I won, netted me 500, 600 bucks or whatever, or 1,000. There were some trades I only made a couple $100 on, and the market said it was time to get out because it just, the playground was not good anymore. The other really important thing I want to stress is that if you decide that this is something that you want to do, is to really focus on trying to get in as early as you can. Like that. Most of my trades that I set up, I set those up within the first 5 to 10 minutes of the market open because I'm selling premium, I'm selling time, I'm selling volatility for the entire day. So on average, if I get in between 9 and 10, on average, I'll make 88 cents for that particular trade, that credit that I got. The further along I go in the daytime, those premiums are dropping because there's less time, there's less risk, et cetera, et cetera. So if you've done any kind of premium selling, you understand all this already. A lot of people like to wait until like noontime, 1 o'clock, and they'll say, okay, I got an idea which way the market's going today. I feel comfortable, da, da, da. And they'll jump in and they'll collect, a lot lower premiums and everything. But as you pass 11 o'clock, that premium decay is not linear. It's really slowing down to the point where it's almost like watching paint dry in the afternoon. So if you can make 80% of your money within the first 2 hours, get out, call it a day, and think of the fact that you made $1,000 within 2 hours versus $1,000 in 8 hours, and you go do something else, go have fun. And the last the last chart down here, excuse me, get a drink here. The last chart down here is when I started off experimenting. How wide should my wings be? Some people like to stick at 20 wide. I started off at 15 and I've gradually moved up to 30 wide. And 30 wide just gives me more room for profitability. And it's been a very comfortable wing width for me. So the further your wings are as you increase them to 30, 35 or whatever, you now are creating basically a synthetic strangle versus an iron condor with it. So, and we all know strangles typically make more money than an iron condor because you're not having to buy the protection side. So there are more metrics on my spreadsheet, and I'm gonna put my spreadsheet in the Facebook group side, along with the PowerPoint and everything else. And I think CJ is going to put the recording in there too. And you can download my spreadsheet and you can slice and dice it and pull out whatever. But these are the high level things. I don't want to get you guys bogged down in the weeds or anything. And that's it. So good luck. Trade the charts. Trade what the market is telling you, not what you wanted to do. Be careful. Step lightly into it. When I'm trading 17, 18 contracts, my max loss is around 55 to 57,000 if I just let this thing go wherever I wanted to and I took a total loss. And that's a big chunk of change. So some people like using stop losses. I respect them. I watch it. If I'm confident in where I set my short stuff at, I always have been pretty lucky in terms of getting back to a profitable side. The losses I have incurred, those days I was green before they went red, and I bailed. And sure enough, at the end of the day, the market came back in, and I would have been green. And that's when I really hate myself, and I pull out a bottle of whiskey and have a drink or two. So anyway, that's it. I think CJ is going to open this thing up for questions. So fire away. Thank you guys for listening to me rambling. I'm not as gifted of an orator as my friend Billy Pruitt is. I've seen him do some presentations and go from there. So,
all right. Thank you so much, Mike. Short and sweet and to the point. Let me read off 3 questions that I've gotten so far through the chat.
okay. All right.
One of them is from Aaron. Why do you trade the SPX options instead of the ES options? And why precisely stick to 0 DTE if that is solely for avoiding overnight risks? Or are there other decisions that come into the metric?
Good question. On the E-mini right there, I've looked at doing that. And for me to trade 15, 20 contracts, I'd have to have an account size of Bill Gates. But even trading maybe 1 or 2 of those right there, when you put that trade on, you're getting 1/2. I think it's around 1/2 of what the premium was on that thing, because it's a future instrument versus an option on SPX. you can do this like that with the E-mini, and but I don't. Also with futures, I mean, your risk is unlimited to the upside or to the downside almost. And with the options on the SPX, I can. It's just my sandbox. I've done this in, and a lot of people in that Facebook group, the Tasty Trade Option Facebook group, this is what they trade too, and they've had success with it. So it's like I'm not going to try to reinvent it or try to do something different from what these guys have had success with. I'm just following in their footsteps. To your other question, do I only do this on the 0 day? Yes, I do, because the theta decay that occurs that during that daytime. Because you know what, whatever you sold at 50 cents that morning, it's going to go to zero as long as it didn't get tested or the price didn't hit that strike or anything. So I feel confident that I will get my theta decay. Now there are some people on this on that Facebook site. They don't use a 0 day. They'll go out 1 day. They'll do the 1 day DTE. They'll open it and they'll close it all in the same day, but they feel more comfortable doing it with at least a 1 day type thing. So what I've done with you in this presentation is I provided you with, it's like a recipe. I've given you the recipe for what I do, but you may like a little extra pepper in your recipe, and you can tweak this to however you feel comfortable with that. So
Don't you mean cayenne pepper?
cayenne, exactly. Some cayenne, or maybe like little zatarans and spices. So
There you go.
so this is the framework, that this is what I do. This is where I've had success with, and I try to ride that train as long as it's going to take me. But I'm running about 90% success rate with what I'm doing right here, and until something happens that changes, this is where I'm going to stay at.
Awesome. Next question, it comes from James. He was asking, why exactly do you use Delta 4 and 5?
So with Delta 4 and 5, if you understand Delta, if you take one from that Delta, that gives you the probability of success. So when I sell a 5 Delta at the opening right there, at that point, I have a 95% chance that option is going to expire out of the money. And that's the whole goal, to have those options expire out of the money. You can use the 5. There are some people in this other group here, they will sell the 7 to 8 around there. But when you get days that have low volatility, that 5 is maybe 40 strikes away from at the money at the market open. And if you start selling something higher Delta, you're a whole lot closer to the flame of that candle. So any kind of big movement is really going to put the margin and the profit window a lot narrower. But
Okay.
the 4 and 5 is what these other guys have been using, and they've had success with it. I've had good success staying within that area right there. I am thinking about moving it up to about a 6 or 7 Delta, but I'll wait until we get a little more volatility in the market. So those strikes are further away from at the money. So
at that point, you're moving from cayenne pepper to habanero.
Exactly. Maybe yeah, anything higher than that, then I'm looking at ghost peppers.
Oh, okay. So that's side to side, definitely. Gordon was asking, are there any alternatives to Bookmap to give the similar information?
I wish there was. I also wish there was. I don't think there is. I haven't seen, I mean, until I came across Bookmap, I had never seen anything else like this before. And looking at the Bookmap, I can quickly look at it and tell right away, is the market going up, down, or is it just confused and doesn't know which way to go? Because there's equal amount of volatility and liquidity above and below the current price on the E-mini. So if you open up a Thinkorswim or account, you can get Bookmap for free in there, but you'll be able to see the E-mini, which is basically the only thing I watch. You'll also be able to watch Microsoft and Apple like that. But in terms of anything else, all you can really do is go on YouTube. Bookmap has their channel on there, and they have traders in there daily, and they'll have their bookmap up, and you can kind of see what the market is doing. But then you're at the you're at the behest of whoever's running that show. That's not you're not able to do anything. You're just following along whatever they're doing. But they are pretty good, and you can learn a lot.
So Gordon, I'm assuming that you're from Canada, and that's why Bookmap doesn't accept it. Thinkorswim may allow it. You can ask them directly. But if not, like Mike said, go to YouTube for Bookmap, and a lot of those traders are actually doing live trading with their Bookmap showing up in real time. And there's also actually a Discord group for Bookmap as well. And in their live trading, they do that too. So hopefully that'll help you. All right.
Now on CJ's Discord side, on the live trading side right there, I'm in there daily, and I typically will keep my Bookmap e-mini chart up on the screen that I'm sharing. And then if somebody wants to take a look at Tesla or Apple or Facebook or something like that, I will I'll flip my Bookmap over to that particular stock, and I'll tell them what I'm seeing, and they can basically ride my coattails off of my subscription right here. But in general, I'll keep the e-mini Bookmap heat map up on the CJ's Discord side on his live trading chat there.
So at this juncture, let me be a shill for Mike Walker's link. I posted it up on the chat. If you use that Gumroad link, you'll be able to join him each and every morning for trading. He'll call out live what his iron condors will be, which levels he's going in, and you get to watch his Bookmap on the Discord itself constantly throughout the day. So yeah, that's another way of doing it as well. I do have, so if you have other questions, please type it in. I do have a question. What was it? When I first heard about iron condors, and I watched a couple of the YouTubes on iron condors, they typically were doing like 60-day DTEs. They would open it up 60 days out, using the point of control as their guiding principle. And then they would suggest that they would close it around the 45-day mark. Have you ever done anything along those lines? Would that make sense with SPX at all?
Yes, I have, and I continue to do that too. In some of my accounts that I can't really day trade in, I will go out anywhere between 30 to 45 days out, typically.
Oh, okay.
If you go out any further than that, the theta decay is really, really slow. Right? If you watch any of the Tasty Trade videos, they'll tell you, 45 to 50 days is maximum, is a sweet spot for any kind of decay there.
Okay.
So what I'll do is, in my dad's account right there, I can't day trade in there. So I will go out 35, 40 days, and I will put an iron condor on, and I'll put 50 wide wings or 30 wide wings, whatever, and I'll put that on, and then I'll monitor that. But it's something I can go to sleep with at nighttime and not worry about the fact that, hey, my short strike is 300 points away from where the current price is right now. So I think I can go sleep tonight and wake up tomorrow, and the world hasn't come to an end. And you have more management ability too when it's set further out. You get better premium, but your theta decay, your volatility is not going to change a whole lot. But your theta decay is really slow at that point. Whereas when I'm doing the 0 day, I'm dancing with the devil all day. Yeah. this bit like that.
Indeed.
Yes.
Okay.
Also, on your to let everybody know, and some of you guys already know this too because you're in that live training chat with me. When I'm in there and I'm starting my trades and everything like that, I don't have enough time to type out and send out a notice to people to say, "Hey, I'm going to do this. I'm going to short this. I'm going to buy this or whatever," because that is so dynamic and things is happening so fast in that first 10 or 15 minutes in the morning. I would lose my window if I typed out and I sent out notices. So on the live trading chat that CJ has set up right there, I'm continuously talking what I'm looking at, what I'm seeing at. So like yesterday, I tried to get into some put spreads. I couldn't get filled, and I ended up just sitting on my hands. Which when you start doing these type of trades, you really want to get a feel for: is today a good day to trade? Is a good day for a put spread, a call spread, or a condor? And if those answers are not good for you, then it's better to walk away and not even think about trading it because you're not going to get a whole lot of money for your risk reward. And it's better to live and trade another day because these things are happening daily. So if you miss today, it's okay. But yeah, on the live trading chat, I'm continuously talking, saying what I'm looking at, what I'm trying to get into, and as soon as it gets executed, I let everybody know that, hey, I just got filled for this particular trade, and then I'll copy and I paste that into the CJ's free side and on his premium side too, and I answer as many questions and I help as many people as I can. And we got one guy in there, his name's Henry, and he started off with just doing a couple of contracts, and he's doing 10 contracts now, and he's smoking it. He's doing great with it. So, and he's in Singapore of all places. Can you imagine?
Yeah, that's
So,
really late for
yeah,
sure.
yeah.
Definitely. Okay.
Okay.
Very good. So on that note, let me switch over to, why can I not see the, here we go. Let me share the, why is it cutting off? Okay. Can you see that? Okay, so this is where we go into the live trading on the Discord. This is where the chat takes place. But this is where Mike will be calling it out live, and you'll be able to put in the same trades that he's doing it at the same time that he's doing it. So that is a big benefit.
Some of the guys in there, they get their trades in faster than I do, and they get better premiums than I get.
Yeah.
Yeah, the students become the teacher.
Well, we're all learning at the same time for sure. So definitely, Henry is one person. The doctor, Derek, the doctor from Canada, he's also pretty good when he's putting out trades as well. And so we have that available. And when you sign on, one of the other benefits also that you get is right here. It's the Autobot alerts. This is it's based out of the algorithm that I had written about 2 years ago and had been improved multiple times. I'm already at version 5. And the thing with it is that you have to manually monitor each of the different stocks in order to be able to see, hey, here's a very good entry point for this or that. And so I wanted to automate that. And so I reached out to programmers out in India, and it took about 2 months until finally we're able to come up with a functioning bot. And basically what the bot does is what I do manually. It just automates it. And right now we started with about 8 stocks, and the version 2.0 has been awesome. And since then, we have improved it into actually having 2 bots, one in the cloud and one in my computer, just in case one of them goes down. So we're monitoring now a total of about 25 stocks that I have particularly chosen for their liquidity. And it comes out like this. Okay, so it'll give you the time that it's coming out, the price. It'll give you the take profit levels, as well as the stop loss. And last week, now I didn't take every single trade because I'm also watching the overall market. But the ones that I took based upon the trend of the market, it came out to having 9 winners, 1 loss, which was my SPY lotto. I was thinking it was going to drop to 496, but it was a 11-cent loss, no biggie. And then 4 of them I'm swinging to next week: Apple, Amazon, Nvidia, SQQQ. Next week I'm looking at the market being, at least for me, this is my take on it. And I would like to get your inputs as well, and get into kind of like an open forum again with the rest of you. Is how do you feel about the market moving forward? Because I feel bearish, I took all of these into swings. Oh, the indicator bot, by the way, since version 2.0 came out, the record is what, like 77 wins, 5 losses, or something like that. This is just purely the alerts itself, not the trades that I took. But this is my particular result. So what we're looking at is this. Okay, these are the main. I filtered it through the 3 stars economic reports. I typically get rid of the 2 stars because it just gets to be too many. I just want to get a good sense of the whole week. And this is what we have. Monday at 10, we have the ISM non-manufacturing PMI, crude oil inventories at 10:30 on Wednesday. That I think will be probably positive. Thursday, we have the initial jobless claim, which was good this past week, and they're forecasting higher job losses. So as it stands right now, bad news is good news, good news is bad news. But I have a feeling that that number will be lower than the forecast. And then PPI, what is the producer price index? That'll come out Friday, 8:30. So based upon that, I kind of wanted to open it up to everyone. And feel free to kind of jump in. What are your thoughts of the market? Where do you think it'll go? Which days do you think are going to be bullish, bearish, and why? Anybody like to jump in? Mike, you want to start us off, and then others can just unmute everyone.
Okay.
And just kind of chime in, please.
Let's see. I don't know. I'm hoping for a Santa Claus rally here pretty soon, because I got a lot of long equity positions that could use some help here. My main thing I'm focusing on is what's JP going to speak, and what's their decision going to be when they come out with the FOMC this month.
Oh, we have whatchamacallit, the Fed speaker silence, FOMC silence for the next 2 weeks.
Yeah. So that's based on the jobs number that came out yesterday. It kind of put a damper on, are we going to lower rates or whatever? Don't know. Hey, Aaron, thanks for coming in, man. But my modus operandi is to take each day as it comes and look see what's going on that day and what's going on that week. Because I cannot go out a week ahead or a week and a half ahead and think where the market's going to go. Let's look at just long-term trends on the SPX or the ES on a daily chart, and I look at the moving averages. Are we getting better or worse? You know, so that's the best I can do, man.
Okay.
My crystal ball is I bought it from Walmart. Should have never done that. So,
You got it on sale.
yep.
All right. Let me share with you a, hold on, let me get to it. There's a trader who I'm asking him to kind of jump in with us and join us. And we had really good conversations even last night, but this was his chart, okay? And what he's looking at is, this is the level, I think that's volatility, the VIX. And looking at the daily, he's looking at the, at the triple bottom hitting on the VIX. And then at looking at SPX, this is his chart. And what he's seeing is that on this downward trend, it has been hitting that particular level and it would just drop. That particular level and it would drop. And then right now we are again at that level, the 4071 level. 4110 is kind of like the resistance level. So the way I see that is, well, third time's the charm sometimes. And in light of the fact that we are end of the year, Christmas rally typically happens, and you will have that happen 1 week or 2 weeks before Christmas. It just inevitably does. This week, by the way, is 401k Monday. So when you have all that money, all that liquidity coming into these mutual funds that are managing the 401ks, what do? Well, they have to get into some sort of indices, S&P 500, QQQ, any of the mutual funds that they get into, it covers the same amount of stocks. So unless Monday's report is super terrible, Mondays typically tend to be bullish on a 401k weekend. So it may actually break out or actually reach 4110. I don't know. But his take was that we're going to hit this resistance and we're going to go back down to potentially down to 3749. So that is his take on it. My take on it is I hope so. I think the ISM PMI numbers will be bearish. Oil inventories will be probably bullish, but we're looking at Thursday and Friday being bearish. So if I had to kind of choose, like when you go to the casino and you play Baccarat, you choose one or the other. I mean, there's really only two choices. That's the way I would choose it. Monday will be bullish, even though the 10 o'clock one may be bearish. Wednesday will be bullish. And then Thursday, Friday, I will choose bears. So that's, my take on it. That's my biases. But again, I appreciate the fact that Mike goes through the book map. He goes all through the pre-market information. And that really tends to paint a picture of how the market will directionally go. Does it go all the time in the way that we think it will? No. We had 2 flush days. So Friday it went down. So typically, I think 2 months ago, if the market is bad in the mornings, it'll be basically trending downward all throughout the day. But yesterday we just reversed and it just kept on going up. In spite of the fact that there was nothing major coming out thereafter. I mean, the news in itself was not good. If anything, Jay Powell did not say anything different than what he had been saying. But because his stance, his demeanor was kind of dovish, I think that's where the bullishness came in after his speech and the Q&A. In his Q&A, believe it or not, he did a fantastic job of not stepping on any landmines. And I think for that reason, it was just positive. So maybe Friday was, the strength of that Thursday just flowing through, in spite of whatever bad news there was in the morning, just flowing through that. And everybody just ignored it and just kept on pushing forward. Maybe that's the reason why, I don't know, but it is what it is. Keep in mind also the fact that, yeah, the market is still in the overall bear territory. CNBC pundits would say that the Dow Jones has hit a 20% increase and they have moved out of the bear market. I don't believe it. I think there's still too many things in the macro aspects of the market that keep us in that overall bear story. But each and every single day is just, it goes up and down. And it has been, especially in the past 2 months, it has been frustrating to trade. I wish it was trending one way or the other, but it's just been whipsawing back and forth. So the only ones that are really making money are the institutions and the market makers. But in any case, just know that those are the forces that are within us, that are taking place. Any other thoughts?
No, I think you covered it pretty well. If you look at the overall trend, the step back and look at it from a 50,000-foot level, it certainly gives you a clearer picture of what's going on and what's hopefully coming down the pipeline there.
Yeah.
That's the only way you can look at it. And it's like, you don't get yourself lost in the weeds and don't see the forest.
Yeah,
So,
definitely.
but given the type of trade I'm doing, I can't look at it from a 50,000-foot level in terms of which way we're going. I have to look
Yeah.
at it, what's going on, that, what's the fire closest to me to step out.
Yeah,
So,
definitely. Okay.
but knowing what's coming down that day and what's coming down that week is really important. And that's why the first thing I started off in the morning is we're looking at those calendars, just like what you went over. So,
Yeah, definitely. Okay. Any questions from Gordon, James, Ken, Terry? Any questions for nope. Anybody else?
Good.
Okay, somebody had asked which do we sign up on when we get to the website? So when you click in on Mike's link, there are several. This is the one. This is the premium Discord where you get Mike's live trading. Plus, you also get phone alerts. That's part and parcel of the package. And this is where you get the alerts that I had shown you here. The stock alerts come in, they definitely do come in here in the Discord. But one of the things that we were able to do is actually set it up so that you would get it on your phone. So it'll be done through Telegram. Everybody has set a unique sound to Telegram. So that way, when an alert comes through, you'll hear whatever unique sound. Somebody actually has the sound of a cash register, like ching, and so, because so far we've been hitting 90 to 95% winners on day trades or swings on those things. So You get that as part of the premium package. There's a Futures Pro package. You can read up on it. This is the original algorithm. I don't know. What am I doing? Here we go. So that's the one to sign into. Oh, please use, here's a discount code, AFF10. If you use the discount code AFF10, your price will go down from $39.95 a month down to $29.95 a month. And you get 1 week free trial as well, in case you think that Mike was full of it. After a whole week, you can cancel it out.
That's happened. That's happened.
And one good thing about it is that once you stay at that $29.95, it will never go up for the rest of your life. We actually have some members, charter members, who they pay $9.95 a month. And some of them are paying $14.95, some are $19.95, some are $24.95. So they've stayed a while. Futures Pro is the if you trade futures, like futures, not iron condors, but futures. Indicator Pro is my actual algorithm that you can purchase. If you run a Discord, if anybody else here is running their own Discord, we actually have an Indicator Bot Discord service. So the alerts will go into your premium Discord. You just pay a flat fee and you get it. And then here's a partner of ours. Axe Capital is a Discord where they trade 99% of the time they trade futures. And same thing, you use the same link, $29.95, and they are chock full of information. Everybody there is an expert in trading futures, whether it be the mini ES or NASDAQ or oil or Forex. We decided to kind of join them and partner with them. And since we are not like focused on all day long futures trading and getting in and out, I felt that they would be a much better fit for those who wanted to trade futures. So that's what's available. I hope you've enjoyed it. Thank you for those who have joined us today. This will be recorded and posted, and you'll be able to review it. So unless anybody else has any other questions, we are done for today. All right.
Thank you guys for listening to me ramble there. So I appreciate it. If you got any questions, I'm on the Discord site, and just both the free and the thing, and just send me a DM, and
Yeah.
I'm happy to help you out.
So thank you, Mike, for the presentation.
Thank you.
And we are ending it in time to be able to watch the pregame stuff that comes along. So I'm going to end it with saying, go Bulldogs.